We're at the start of an incredible bull market in precious metals, and that's what I'm going to talk about. Okay, so you guys hear lots of presentations. I always say this, and you probably remember less than 2% of what everyone says, so I just like to dumb it down to a couple things. And what we have is basically gold breaking above 2100 is the biggest breakout for gold in 50 years. And I've been here the last few years saying that, so now it feels good that we're not talking about if.
Oh, so there's already a question.
And hypothetical, in theory. We don't have to talk about it. We have the breakout. It's the biggest breakout in 50 years. And I mean, just look at the audience. This is one of the smallest audiences I've presented to. So, I mean, that's another good sign. And second thing to remember, the next few years are going to be just absolutely incredible for gold and silver. I mean, these silver companies right here, I mean, and all silver companies, they're going to have to do something really dumb to not do really well in the next few years. So that's just the reality. I'm going to talk about the 3-year time frame, but that's what we're setting up for. And that's the easy part. The hard part is everyone has to have their own plan as an investor. You have to know what you're doing, when you're going to sell, how you're going to trade, what you're going to buy. And I think for companies, what I tell them is you need, given the way that gold and silver bull markets develop, you tend to have, they're around 3 years. Some are a little bit shorter, some are a little bit longer, but you really need to have a 3-year plan to zero in on where are you going to be in 3 years. So that's basically the key takeaways from this presentation. I'm going to go into a bit more detail now. Okay, so I have lots of charts. So take a look at these charts, and here's the pointer. Okay, so we have these are the major asset classes. I mean, we have gold here instead of commodities, but we have the stock market, gold, and then this is the 10-year bond total return divided by the CPI. So this is the real return of bonds, essentially. And I'm starting with bonds because the yellow here, these signal secular bear markets in bonds. And so last few years, we started another secular bear in bonds. So even though the stock market has been strong, this has really helped gold, along with China buying and all that macro mumbo jumbo that you guys know. So the secular bear market in bonds, this has been huge for gold. And, there's an alternation. Sometimes there's an overlap, but, you have secular bull markets in the stock market, and then you have secular bears in gold and commodities. And like I said, there can be some overlap. So we're seeing a bit of overlap where gold has broken out of this super bullish cup and handle pattern, and yet the stock market is still going up. So the stock market has not fallen into a secular bear. And the similarity historically is 1964. I mark this right here because this is when gold stocks broke out from a 28-year base. And it was right around the time when the bond market bull, the secular bull in bonds, peaked and then rolled over. And so once we get the stock market peaking and rolling over, then we're going to be in a real secular bull market in gold and silver as well. So that's really the last thing that we're waiting for that's going to take gold to 3,000, 4,000 and beyond. So that's an important thing to remember. Okay, so this is gold here, and this is gold against the total return of a 60-40 portfolio. So this is your classic investment portfolio, 60% in stocks, 40% in bonds. And so it's the total return, not just the price. And yeah, it's been interesting the last 5, 6, 7 years or so where gold against the 60-40 has actually made lower lows, and yet gold made higher lows. So that is a bit of a divergence. But we can see, the secular bull markets in gold in the 70s and 2000s, it's accompanied by gold outperforming that 60-40 portfolio. So in the last few years, and even in the last month or so, gold is really trying to bust out and break out against the 60-40. Gold has been crushing bonds, the 40%, but we know that the stock market has done really well, and that's why this hasn't broken out yet. And so I think once this ratio breaks out to the upside like that, then you're going to have a real secular bull market with a lot of room to run. And so we can see here, like those confirming moves, 1972 and 2002. So that's one signal that I'm waiting for, and it's something I've been talking about a lot in recent months. And so this chart's a little old, but I mean, this shows gold breakouts. And I mean, this is just a beautiful cup and handle. I mean, this is chart porn for guys like me. And like this breakout this is going to be in technical analysis textbooks in 10, 20 years. I mean, this is such a historically significant breakout that, I mean, I could talk about it all day. And this is the biggest gold breakout in 50 years. I mean, since we went off the gold standard. Okay, so regarding the cup and handle, there's a couple things that you need to know as far as targets. So you have the measured upside target, which is just measuring the depth of the cup, and then you apply it to the top. Now, because the actual cup, you have the slightly higher high, the way it played out. So depending on how you measure it, you can get several different targets. But that target essentially is roughly 2,900 to 3,000. Now, this is more exciting, is the log target, and that's basically the percentage target. And so I looked at historical cup and handles, and you have to take my word for it. I mean, it'd be another presentation. But there's like 4 or 5 similar cup and handles historically. They're not as pure and perfect as this gold one. But looking at all of those, all of them went beyond the log target. So this is a super bullish pattern that is going to go beyond the log target. And the time, all of those examples, the time from the measured upside target to the log target, it was about 6 to 12 months. So you could think, well, if gold hits 3,000, let's just say the end of this year, then maybe by the end of next year it could hit 4,000. So that's the math behind some of these targets. Okay, so drilling down more into gold and these cyclical moves and how long they last. So let me differentiate between cyclical and secular. So we are in a new secular bull market in gold, but it will be confirmed once we get that move higher against the 60-40 portfolio. So we have not got that yet, but let's just assume we're in a new secular bull market for gold and precious metals. So that's going to be another decade of higher prices. But if you look at precious metals, and especially the gold stocks from 1960 to 1980, they performed extremely well. But there were 2 bear markets where they lost 60 and 65%. So yes, I'm super bullish on the next 3 years and the next 10 years, but a consequence of that is we're probably going to see a nasty bear market before 2030. I mean, it's not in the next couple years, but that's something we need to keep in mind. And that's why I mentioned to companies, like, you need to have a 3-year plan. You need around that time. Like, you need to know what you're doing. Are you going to build mines? Are you going to sell? Develop an asset, because you don't want to get caught into the next bear market. And so this chart, you can see the length of the cyclical bull markets in gold, and I tend to measure them a little bit differently than most people, but the median or the average, it tends to be around 3 years. And even the 70 to 74 one, like I could have measured that and started it in 1971, so that would have been less than 4 years. So these moves tend to be around 3 years. And based on how I measure it, my start is at October 2023, not 2022. Like, if we're measuring from 2022, then I would say 4+ years. So I'm measuring from October 23, roughly 3 years. So that puts us, end of 26, maybe early 27, around that time. And so here's another chart that this helps me assess and project what could be coming for this bull market. And so these are the bull markets that I've plotted, and this is on the current scale. So this is on the scale of the October 23 bottom. And I think we are right. We're around here, if I see that right, but just look for the black line. It's around there somewhere. But I mean, these are the 4 best cyclical moves. So you have the 2 moves in the 1970s, and then we have 05 to 08 and 08 to 2011, which was less than 3 years. And so given that we've had this fantastic cup and handle breakout, this is going to be a really good cyclical bull market. So I would expect it. Is it going to be as good as these moves in the 70s? Probably not, just because those were so extreme. But I would expect it's going to be better than these 2 right here. So based on this analog, based on the history, I mean, we could see for this cyclical bull, 5,000 or 6,000 gold. The measured or the log target from the cup and handle is roughly 4,000. So we should expect the market to eventually go beyond that. So based on this analog and the fact that markets tend to go well beyond their cup and handle targets, that leads me to think, this cyclical bull, that we really have potential to hit 5,000 or 6,000 in, call it 3 years. Okay, so we're moving away from gold. We're going to talk about the stocks a little bit. And so the best indicator for the gold stocks long term is actually the inflation adjusted price of gold. And if you think about it, it makes sense because the gold miners, they move based on their margins. Gold, and other people talk about this. They move based on the real price of gold. So it's gold divided by commodities or gold divided by inflation. And we know that because we can think about the last 3 to 4 years when the gold price is relatively high, but the stocks were going down significantly. And that's because cost went up. So a good way to measure that is the inflation adjusted price of gold. So gold divided by the CPI. And so you can see the comparison where black is gold against the CPI and the other color is the gold stocks. Now, recently the gold stocks have lagged a little bit. And you go back to last year, I think that's valuations. So, based on this relationship, the gold stocks should be a little bit higher, but last year their valuations came down because everybody was so pessimistic. And so this is the real significant chart here. This is the inflation adjusted price of gold. And so this is setting up to break above a 45-year base. I mean, this is really exciting. And of course, it's driven by the cup and handle breakout, because if gold is going to 3,000, 4,000 the next few years, I mean, that will pull, or it's likely to pull the inflation adjusted price higher. And so this to me is the next big breakout in gold. We already had the cup and handle for gold. And next we're looking at the inflation adjusted price. And that's why it's significant, because this is what the stocks, this is what the miners follow. So that's why this breaking out is significant. And then the next breakout after this will be silver. But talking about the stocks, this is an index. I mean, everybody knows what the TSX Venture is. This is a sub-index within that, and it's only gold stocks. So this is something I discovered last week. And so this index has about 30 companies in it. The average market cap's around 300 million. So if you think about GDXJ, this is probably it's probably the bottom of the GDXJ, you could say. And so the companies here are probably a little bit below that. But this is significant because this is a 10-year base. I mean, they don't have the data, but if you looked at it, it's probably like a 11 or 12-year base. And so we could see, I mean, it's just slowly rising. So again, you could consider this like below GDXJ. Like this is like a mini GDXJ. And so this is setting up, it's obviously not as strong as the gold price or GDX or GDXJ, but this is moving up. I mean, this is setting up where in the next, 6 to 12 months, we're going to have a spectacular breakout, once it breaks above this blue line. Okay, so we're going to talk about silver. I'm teeing things up for the next panel because we know that historically, when gold performs and gold does well, eventually silver follows and silver outperforms. And actually, in a very short-term sense, what happens when you get a gold breakout is there tends to be a corresponding silver breakout that comes after that. And then silver outperforms gold after it makes its own technical breakout. Now, the difficulty right now is, well, is the breakout, is it breaking above 26 or is it breaking above the 28, 29 level? And with the way things are acting, I think when silver takes out that 29 area, then you're going to see it really strongly outperform gold. If you look at the gold silver ratio chart, I apologize for not including it, but you could draw a trend line and it looks like that's really close to breaking down, which would mean silver is going to outperform gold. Once silver, maybe in the next couple months, once it clears, maybe in the next couple weeks with the way things are acting, once it clears that 29-30 area, then it's going to start to really outperform gold. And so this is actually not a cup and handle. You'll see many people talking about it, even though it looks like a cup and handle, and it's a super bullish chart once it breaks 50. Technically, it's not a cup and handle. So you have to be careful. If people are calling this a cup and handle, they're lacking a little bit of knowledge on what goes into these patterns. But nevertheless, that aside, it is super bullish once it gets back to 50 and breaks. And so I have said, gold breaking 2100 and gold breaking out of that cup and handle pattern, that's the biggest breakout in 50 years. This thing, once it breaks 50, that's the biggest breakout of all time. I can't find another chart in a significant market that has this kind of base. So that's how significant this is going to be for silver in the next couple of years when it breaks 50. Now, I think the stocks will they'll really start to move and really start to outperform once we get silver breaking 30 and we're into the 30s. By the time silver breaks 50, I think we'll probably be towards the end of the cyclical bull move that I talked about. But that's why you want to be invested now. You don't want to wait till, I'll wait till it breaks 50. And you wait till it breaks 50, it's going to make this moonshot move, and then the cyclical bull will be over. It'll probably have this bear market for a couple of years, before going beyond 100. Okay, so let's just recap and think about what's important to remember. I didn't want to come here in January because I was tired of giving the same presentation, talking about hypotheticals, if and when, and gold, the cup and handle. It's broken out now. It's already happened. This is the biggest breakout in precious metals in the last 50 years. And it has a lot of room to run. We are still really early. Even for the cyclical bull market, which again, I think end of 26, early 27, we're still early. And there's still time to invest and find really good value. And I'm afraid if people wait another 3 or 6 months, that you're going to have to pay up for a lot of things. And this feeds into number 2, but the next 3 years, this is going to be really incredible for gold and silver in this industry. And so, third, we all have to have our own plan. Yes, I think we're going into a new secular bull market. So this is going to go into the 2030s. We're even going to go higher ultimately, but there's going to be a nasty bear market after, or I should say, in between, somewhere in between these huge moves. And so that's why you really need to have your own plan, not only as an investor, but also as a company. You have to understand where the market is going, what the potential is in the next 3-4 years. Maybe it's 2.5, and it happens faster than I think. So you have to understand where things are going and have a plan. And if you have a plan, that's the hard part. The easy part will be making money. The hard part will be keeping it and executing your plan, whether you're an investor or a company. So my time is winding down, but this is really exciting. We are about to enter into an incredible bull market for precious metals. This is no longer hypothetical. It's happened, and you don't want to wait for confirmation or wait for prices to go a lot higher. Now is the time.